You're watching us here on Halftime Report. We're celebrating Diwali in the CNBC TV 18 studio. Let's get you some more numbers. We spoke with a bunch of managements. The next one on our show is Greenlam. Reported a decent set of second quarter numbers, a 12.8% revenue growth. EBITDA grew by about 8%. Given the context, it's been good also because, the veneer business continues to stay a bit positive. Let's get chatting with Saurabh Mittal, the MD and CEO of the company. Saurabh, the first obvious question after festive greetings to you and your team. 14%, 15% revenue growth in the first half of this year. The EBITDA has grown just around 4% with margins at around that 11.3% mark. Where do you see things as they were in the second half of this year? And by the end of this year, what would your revenue growth and your margin look like? Because earlier you had spoken about 20% growth in FY25. First half has fallen a little short.
That's right. So I think on an annualized basis, we should be looking at an 18-20% kind of a top line growth. That's also because one of our plants will get into commercial production in Q3 in this quarter. And we expect some revenues coming in from that plant, which is the particle board plant in Q4. So I think that's on the revenue side. On margins, I think as we scale up, as we do better each quarter, we hope the margin should also keep improving. And you must appreciate that in the first half of the year, versus last year's H1, we've had two new plants which have been capitalized. One plant in Tamil Nadu, the laminates plant of Andhra Pradesh. So we've had higher operating expenses and higher depreciation and higher interest too. And so clearly, I think a fair comparison may not be correct, but it is what it is. So this is where we see things right now.
Saurabh, good afternoon. Festive greetings to you and your team as well.
Also. Thank you.
What about margins, Saurabh? Actually, what about, and would it be fair to say that now that your new plants come on stream from this quarter around, you expect to return back to those 12.5% margin levels by the end of the year? And also share with us your volume growth outlook for the rest of the year as well.
So yes, I think we should be able to return to those margins or even be better as things go ahead. So I think that's on margin. On the volume growth, H1 in a core category, I think we've done about 10-11% of volume growth. So I think we should be able to maintain a 10-12% plus minus a little bit volume growth in the core category, and we expect to do better across the other verticals too. In H1, I think we've grown in laminates pretty well. We believe we've won market share in both domestic and international markets. The flooring and the veneer business is seeing better traction. Ply is also, at least on the product side, the network side is stabilizing because we're right now still only present in South India. We've added Maharashtra to the expansion in this year. Chipboard plant will come in stream in Q3 of this year. We should start seeing revenues in Q4. So I think over the next few quarters may not necessarily be only H1. I think each of our categories will do better. That's our guess, and that's our hope. And we are working towards building each segment of the company and trying to win in every category in every market.
From what we've been speaking over the last many quarters and even this one, it seems like it's a story more of FY26 than just FY25, because then you'll have a lot of your plants up and running. The capacity utilization of your plywood business will improve as well, with you having moved to a lot more markets, with the deco veneer margins only improving from here on. So let me probe you a little bit and ask you, what does your revenue in FY26 look like with all the capacities that are likely to come on stream and a lot of these synergies which play out already? So what is the sort of margin expectation for FY26 then?
Hard to give you that number, but I can say with the capacities which will come on stream, including the one in Q3, the utilization will happen over a 2 to 3 year period. So maybe I think FY26 too, we will not see the entire revenue coming into the balance sheet. So I think over FY26, 27, 28, so I think over the next 2 to 3 years, we probably will see nearly close to 100% utilization across particle board, plywood, laminates. So we're already at a 92% utilization in Q2, and on an H1 basis, I think we're like slightly above 85%. And in laminates, we have possibilities to do brownfield expansion in both our Gujarat factory and Andhra Pradesh factory. So we might need some capacities at some point in laminates, which we'll probably put up in Andhra Pradesh or Gujarat. And we hope to improve the veneer flooring door business too. So I think the entire story will pan out of what we've done now, maybe over FY28. So 26 to 28, I think those 2 to 3 years, we probably will see, hopefully things kind of shaping up quite nicely, for the company and, for all those stakeholders.
I remember that you had said that the entire capacity that is being added will amount to around 4,000 crores in terms of revenue at 100% utilization. You still hold on to that, right?
Yeah, absolutely. Well, that's correct. Yes.
So 4,000 crores by FY28 on your existing capacity.
I'm saying, 2 to 3 years. It's what we how we see things. Yes. So maybe probably around that time actually.
Saurabh, your veneer business turned a bit positive this time around. Do you see this now as a sustained trend of profitability going around? And what do you see your peak margins in this business and by when?
Yes, we do think that this will be sustainable. And like I said, in the flooring and door business, we are seeing decent traction with several real estate projects coming into fit outs and interiors, to be done in those projects. And steady state margin, my sense would be more like a 10-12% kind of thing, as we move ahead.
And by when?
Well, our endeavor is to do it the earliest, but clearly I think we are, if you see the losses have reduced, they also reduced gradually over a quarter. And last quarter, overall, all the three businesses combined, we were a bit positive. I hope this only keeps getting better as we move ahead.
All right, just a quick final question before we let you go. On your debt, you have almost 1,000 crores of debt, which you've taken on account of the capex that you're doing. But you haven't lined up any further capex apart from a possibility of something being increased in laminates. So do we expect the debt to have peaked at current levels? What is your debt reduction plan as things ramp up? That's point number one. And the second one, working capital days. You've managed well with around that 40 days sort of number. Close to 59 days of the number.
Yeah, 60.
What's steady state number there as well?
So on the debt, we think we have some more capex to be done, for the chipboard plant. So debt might go up another, plus minus maybe like a 4-5%, like a 50-60 crores before it starts reducing. And from FY26, the sense is start kind of reducing once all these projects come into play. On the working capital side, we are now at about last quarter, we were at about 59 days. So let's say we are at 60 days. I think on working capital too, because three new plants have started over the last 2 financial years. So a lot of our data numbers are not showing, are yet not showing the right picture of the performance of the company. I think when all these projects kind of stabilize to a certain extent, we get to a certain size and scale, we think they should also gradually improve. I think that's what we think about the working capital, because the debtors days is pretty strong, I believe. And this debtors days also considering the fact that 45-50% of our overall revenues exports, and in the exports market we have a Red Sea problem and there are delayed shipments. The data is still not working on time, which has improved since September. So lots of what you see, is in a situation where on one front we have changes on the export business, which is showing a larger debtors turnaround or larger inventory in pipeline. We've had the plywood factory and the Andhra Pradesh plant, which was commissioned last year in FY24. So those operating costs and interest depreciation higher. The year before we had the Gujarat plant. So I think once we pull in a bit more numbers, I think all the data, will kind of look much better, I think.
Fair point, Saurabh. Thank you so much for joining in, sharing with us your views on the quarter gone by. Wish you good luck for the second half and for FY26 as well.
So
and festive greetings to you too. Time for a short break. More on the markets and specific stocks on the other side. Stay tuned.